How do you view Spaces and how it impacts, I guess, all of your business endeavors?
Yeah, I think Twitter is where all of crypto is. It's the highest ROI activity for the space because there's restrictions around marketing in the crypto space. Google, Facebook, etc. will not approve ads for crypto companies. Twitter has ended up being like the main go-to as a social network because things can go viral really quickly. And I think for Twitter Spaces, it is like the most powerful way to build a relationship with a large group of people. And when you're on Twitter Spaces, you're also talking to the most important people, the most influential people who are most clued in, who are most intellectually interested. It's different than a long form podcast. What we're doing here is we're going much deeper into a topic. But I think with Twitter Spaces, you have this serendipity element where anybody can pop in. You can hear from multiple perspectives. People can kind of have like a brainstorm session, and it can spark a lot of creative ideas.
Finally got the legend here on the podcast, out of his element, not in Spaces, but one-on-one, mano-a-mano, on a long-form conversation. So where he doesn't get to hide behind the Twitter emojis as he usually does and have 4-hour conversations, talking sarcastically to Leo. I'm here with Trevor Owens. He's one of the GMs over at, or the GPs over at the Bitcoin Frontier Fund. He's the CEO of Ninja Alerts. He is all over the place, all over the Bitcoin Ordinal ecosystems, been in Stacks since probably the beginning, and also hosted multiple shows, the Ordinal show, Not Financial Advice, and he's probably been on your Spaces taking it over if you're somebody who hangs out and hosts Twitter Spaces. So the one and only Trevor Owens, man, thanks for joining us.
Awesome, man. Thanks, Jake. I'm honored to be on the Jake podcast. It's a big one, and it's very professional and well done. So thanks for having me.
Appreciate it. Yeah, it's taken a while to get here, man. I know that you have also had quite a journey as well, but one that I'm actually going to be very basic about the intro of the show because I don't really know your history as much. I just know that you were a Stacks bull, and then somehow now you're just the Ordinal guy that also hosts ETH Spaces as well. And I do want to dive in at some point into, the Bitcoin Frontier Fund, as it's something that you don't discuss too much, but we're very aware of. But just tell me a little bit about who Trevor Owens is. Like, what did you do before crypto? Were you just a traditional VC, or did you have some sort of quirky intro to crypto, just as most of us do?
Yeah, so I've primarily been a founder, entrepreneur, developer, and my background is in the education space and Web2 space. So the business I'm most known for is called Lean Startup Machine, which is the first training program on lean startup methodologies. A lot of my path as an entrepreneur has been in the past about my passion, but also finding like a need in the market that also like solves a problem for myself. Often, actually, Ninja Alerts also solves a problem for myself, which is where the idea came from. And so, I built that workshop company to over 100 cities around the world. Did a decade of advising founders, coaching them on 0 to 1. I wrote a book called The Lean Enterprise, worked with Fortune 500 companies around the world, and also raised venture capital to try to build like SaaS software and enterprise software that would help enterprises to be more innovative and to apply the lean method. We raised $2 million and, launched 4 or 5 different products, generated a few $1 million in revenue, but nothing really broke out. And then over the years, I've advised tons of companies. I've run tons of programs. So I ran an accelerator program in Shanghai for Google for their AI developer launchpad, for SSV, which is one of the top accelerator programs in the world in terms of number of deals they do. And I knew the founders of Stacks very early on, like 2013. One of the co-founders, Ryan Shea, was the first person who really knew a ton about Bitcoin and then read the source code and could speak in depth and handle like every rebuttal. Also, my co-founder and CTO at the time was into Bitcoin because he's kind of a cypherpunk style anarchist type of developer guy. And, I got into it in 2013 and then didn't really see the turning point until 2021 with like production level software like MetaMask, OpenSea, Uniswap, etc. So I was kind of steering away from it, especially during the ICO phase when I saw people raising $40 million for a white paper. Just seemed like a situation destined to fail or destined to be a catastrophe. And then in 2021, this was when Stacks launched their mainnet. Stacks actually used to be, before this was called Blockstack, and it was more like Counterparty. They would record data in OpReturn and allow people to build decentralized applications on the platform. They ended up pivoting and launching their own sidechain, their own separate network that integrates with Bitcoin in a very compelling way. And so when I arrived in 2021, I had the feeling like, okay, it was really Ethereum, I think, that convinced me of the merits of the space, because I view things through the lens of a technologist. I don't view things through the lens of an economist, even though I studied finance and economics in undergrad, but the more I study it, the more I learned that economists are terrible at predicting the future, and like the models don't really work in the real world. They work. And so I gravitated much more towards entrepreneurship and understanding business on the ground level and on technology. And I found the model for explaining Bitcoin and explaining new technologies through the lens of like Silicon Valley adoption lifecycle to be much more powerful than like the common things that the macro economists, Bitcoiners talk about. And so for me, that was like the watershed moment in 2021. And, having followed Stacks and having been just impressed by the team and like the knowing the quality of work and judgment they've had over the years, I checked in with them, and I felt like I kind of missed the boat on Ethereum. Like maybe, honestly, I probably didn't look close enough in the ICO cycle to see some of the actual things happening. And I think that it's not as bad today, but I think a lot of people still make the same mistake looking at NFTs, looking at the rug pulls and like the toy use cases to miss the like what's really happening, the opportunity, the good projects. And so I was talking with them, and I think they point out the opportunity on Bitcoin being that everybody believes you can't build on Bitcoin, but yet here you can. Here's a way that Stack showed you could do it. There's going to be many other ways, and that building on Bitcoin is probably the most contrarian, asymmetric opportunity hidden in plain sight. Like it's obvious that before Ordinals, it was obvious to me, learning from them, listening to them, hearing their philosophies, that this was going to happen. And since I spent previously a decade as a founder, and I missed many opportunities, I failed. I also missed opportunities. And I often think about like why I missed those opportunities and like the logic I should have used. I had the conviction to do the venture fund and to like really focus on this like 2 years before Ordinals. And I was willing to keep going for another year or two to see this play out, and wasn't sure it was going to happen when it did. But when Ordinals dropped, it was pretty clear to me that this was more than just JPEGs on Bitcoin. It was a new paradigm for building applications, and that the Bitcoin renaissance was starting.
Yeah. Wow. It's quite a story. I could see a lot of your past experiences and strengths really coming into play. I didn't realize you were in education for so long, and you really do exude that when you're through the spaces, because you have a good, really strong fundamental understanding of how these technologies work, and you have a really good job, you do a really good job at breaking it down. So as you entered, we'll say Bitcoin in 2021 through Ryan, right, who was working on Stacks, how did you assess the ecosystem? Was it something that Ryan said, hey, this is what I'm working on, completely dive into this? Because at the time, the only things on Bitcoin really you had like Rootstock was like kind of still early, right? There was no Ordinals. Counterparty was still kind of just going through this like historical run. Just taking the skills that you had previously through all your different experiences, how did you go about understanding the ecosystem?
Yeah, so when I came back into Stacks, I mean, they initially wanted me to do their accelerator and were offering to help me raise capital. For me, I had just finished with the Google accelerator in Shanghai, and it was actually due to the trade war, that like Google had to pull out of China and pull a lot of any exposure to their IP out of the ecosystem there. So I was considering what I was going to do next. I was also working on a startup to help, like an education platform startup, which we ended up pivoting into Ninja Alerts later. And yeah, I mean, I started checking references. I started meeting with all the executives. I talked to other friends who were VCs in the space, and looking at the larger Bitcoin ecosystem in terms of other layers, it was very clear that Lightning was mainly focused on the payments use case. That's something I've never been bullish on, because I think that payments is traditionally very, very hard. I mean, there's so many stories, especially in growing, kind of getting my start in the New York ecosystem. You've always had like everybody has like a point of sale, like tech startup idea. And those point of sale startups like never succeed. Like they're like a dime a dozen, and they always fail. And just to get something into a merchant and to, overcome the barrier of getting like a good integration with the iPhone, is very, very challenging. And so from an adoption perspective, I've never seen payments be like, aside from WeChat. Actually, WeChat's probably the best example that I can draw an analogy to. First, they built the best social network in China. They built the number one social network. an addictive app that people use multiple times every single day. And then they introduced payments, and then they disrupted the payment space in the entire market of China. And so for me, that's like a very natural lens for, hey, before payments are going to reach mass market through Bitcoin, we need other use cases that are going to get people using it on a very frequent basis. And that can lead into, merchant adoption, to using as a medium of exchange. And my thinking on that has even evolved further, where it's like we might even need to see a majority of like physical wealth, real world wealth, like stored on chain in some fashion, whether that be people investing in Bitcoin as digital gold, or people, buying digital art, participating in DeFi and finance. That until there will be a tipping point where enough wealth in the real world is stored on Bitcoin, on chain generally, that people will demand to use it as a medium of exchange more broadly. It's like the merchants have adopted Bitcoin back in 2013. I wrote a blog post in 2013 why I was excited about Bitcoin. I look back on it, I'm like, wow, this is pretty good. Like this aged well. And it was like, in the blog post says there's more than 500 merchants accepting Bitcoin on Black Friday in 2013. Okay. We've seen merchant adoption over and over again, come and go with Bitcoin. And so when I saw Ethereum, that really convinced me that there's a path forward. I also said, hey, I missed Ethereum. And then I spent more time really learning about Bitcoin and how Ethereum has changed and where Bitcoin is today. It just seemed very obvious that Bitcoin has the most potential to be a global digital currency, because it's apolitical in the sense there's no leader, like the founder's gone. It has more of a public good aspect to it. It's more decentralized, and the block space is more valuable for applications to store data on. And so I saw that like Ethereum kind of proved it out, like Ethereum's the testnet, so to say. And then I worked backwards to Bitcoin, and it just seemed like there was first of all, there wasn't any VC going, very little VC going to Bitcoin. 2022, there was 25 billion that went into Web3, and less than $1 billion into Bitcoin. I mean, most of it later stage companies, later stage deals, almost no early stage accelerators, VCs, etc. When we kicked off our fund, within the first year, we were the most active VC in the Bitcoin space in terms of number of deals, because we do a lot of very small deals. And our founders would go out there pitching Bitcoin startups to like all the top VCs. And a lot of them would be like, oh, no, you can't do this on Bitcoin. Why would you do this on Bitcoin? And so it just seems like I fundamentally believe that like the truth will win in the end. I look at like a lot of historical figures who have achieved great things by making asymmetric bets, because there was no way you could argue like that something was not true. It's just like it didn't happen. And I felt like that was what Web3 on Bitcoin was when I came into the space. And after meeting with like a lot of the people in Stacks, having known them for like a decade and been able to observe like just the incredible work they've done, and already being really impressed, but then talking to all the executives and comparing that to some other ecosystems. I talked to some friends in some other ecosystems where it's like, when there's a lot of money on the table, like it can cause some of these ecosystems to do weird things. Like you can have nepotism, you can have, tribalism within an ecosystem from different entities. And in Stacks, there was none of that. They had a lot of competent people involved, and the community was very positive. And so like it just made perfect sense. It's like I had the idea, I had the opportunity, and I had the path towards achieving my goal, which is to, invest in the best companies building Web3 on Bitcoin.
Yeah, and you've done a very good job at it. But as you mentioned, up until before Ordinals, the large majority of VC dollars had gone into mostly smart contract platforms, alt L1s, and maybe now non-securities, as we record this on the day of the XRP case ruling. But there are, between Ethereum and Bitcoin, they're kind of governed by different social principles. Ethereum's really kind of like the Mark Zuckerberg move fast, break things. Bitcoin is move slow, self-sovereignty, decentralized, no key leader. And so as you were kind of the first mover, one of the first movers in the Bitcoin VC space, did you receive any pushback at that time? And then as a VC in Bitcoin who kind of goes against the original principles of, we don't want VC dollars, we want everybody to be this like libertarian values. How did you go about changing that viewpoint towards VCs as more are now finally funneling in through Ordinals?
Yeah, so what raising money is all about finding the right person. right? That's the primary goal of an entrepreneur to raise money, is to find the person already looking for your idea. And so for good founders, there's no shortage of capital. For good teams who can execute, there's no shortage of capital. While teams in other ecosystems, let's say Solana, Ethereum, were raising much bigger rounds, the majority of our founders who were executing well, were building a good business, were fundraising well, had no problem. Like for the first cohort, the average fundraise within 6 months of the program was like 1.1 million, which honestly is better than Web 2. Even though it's like less in Bitcoin, it's still better than what I would see in Web 2. And it's probably more than enough to get the traction that you need to get to the next level. So while there's definitely pushback, I don't think in the grand scheme of things, it matters. I think that if you are doing something contrarian that is asymmetric, it's par of the course that it's not going to be as easy to raise money compared to something that's extremely hot and not contrarian, right? But the thing is that like things go in cycles and things flip back and forth. What's old is new again. And so in order to be here building now, like if you look at, Xverse, which is a company that I invested in our second cohort, so that was over a year ago, they were here building and fundraising in that environment, and then they were perfectly positioned to take advantage of the movement with Ordinals. And had they not made that contrarian bet, they wouldn't have been.
And we're starting to see that with some of the stack players in the game that were traditionally Gamma, Xverse, Liquidium, right? All starting on stacks and then seeing the larger opportunity, but not really dismissing it. L2s are an interesting ecosystem within crypto, because the L2 space on Ethereum is much larger. It's much more mature, but really nobody really uses it because users aren't going to unless they're forced to. I've kind of learned that through kind of our trials and tribulations at Emblem, and I see it kind of being mimicked across the entire space. So somebody who is investing in companies maybe 2-3 years before the use case, can you take us through like that process of how you assist builders as maybe they may be too early, but it kind of putting them in a position for when that run does come, that they're set up right?
Yeah, totally. So, I mean, the first thing is always like building the right team, like having like a good co-founding team. We look for 3 co-founders typically, and we look for 3 co-founders who have diverse skill sets. So we want to see someone who is the hustler, like the marketer, the fundraiser, the outgoing person who's going to knock on doors and bang them down and, tastefully and tactfully show their product at every opportunity. We look for the hacker, who's like the back end person, the data person, the smart contract person. And then we look for a team that has the hipster, who's like the designer, the front end engineer, the person who's going to make a responsive website that's interactive, that follows best practices of application development. And ideally, all 3 of these people are T-shaped. So that means that they're both a generalist and a specialist at the same time. So they have a broad understanding of business, of startups, of product development, and that they also are a specialist or expert in one thing with it. And that should be like the front end, the back end, and marketing and fundraising. And so that's like the hardest part of the battle. Like you see so many teams who, they have 1 strong co-founder, maybe 2 junior co-founders, or they're a solo entrepreneur, or it's only 2 people who are both hackers. They have no front end person, no business person. Birds of a feather flock together. So that's really like the biggest barrier from 0 to 1. And then I think it comes down to having a mentality of shipping quickly, of putting out something into the market quickly, getting traction, listening to users, validating your product in the market. And then the final step is like the actual fundraising process. So fundraising can be very challenging because a lot of people become an entrepreneur because they want to pave their own path. They don't want to fit into the existing system where they're judged based on a system that has been set up for whatever reasons that are maybe even arbitrary, but just how capitalism works, right? They want to pave their own path, and they maybe think that they would be undervalued in that system. But now you have another system where you're judged even more intensely than in the typical like corporate ladder, let's say. When you're fundraising, like you are the product, and VCs are typically not very forthright with what they think. Like they say it's the only thing then that's harder than getting an investor to say yes is to get an investor to say no. And so you can meet with 100 investors and they'll be like, I love it. And they'll be like, and then the founder will be like, great, do you want to invest? And the VC will be like, let me talk to my partner. Let me get back to you next week. And then you hit them up next week. They're like, oh, Trev, I'm so sorry. My partner's out of town. Like, check in with me next week. hit him up next week. Oh, Trev, this has never happened to me before in my life. You won't believe this. My dog got sick and I had to go to the vet and we missed our meeting, but hit me up next week. And they just keep pushing it, further and further to, a lot of VCs haven't been founders, haven't been builders, and they don't have the time or ability to carefully and expertly scrutinize a startup in that early stage. They typically look at social signals, social proof. Like the most compelling thing to a VC investor is that other VCs want to invest in your company more so than anything else. They don't even know if they knew how to analyze your business, they would have started it. You know what I'm saying? You're the entrepreneur, and it's very rare to find a VC who's been a builder who has that kind of experience. And so you're in the situation, you're like dealing with people who don't know, aren't giving you honest feedback, trying to figure out who's the first person going to come in. You're trying to knock dominoes over in a certain order. And it's a very specific, fundraising is a very specific skill to learn that's different than marketing or sales. It's pitching. And for a lot of founders just starting off, that's what we spend like 3 months teaching. Like we spend 3 months coaching people and teaching them how to do this. And for some people, like they absolutely crush it and they can go running. For some people, it takes longer to get good at it, and even maybe multiple cycles to get good at it. So I think that's the things that we look for. That's the things that we try to help founders. And if you can get those three things, like a really solid team, that initial product in the market, and ideally the product is very focused. A lot of founders try to build like the whole kitchen sink. The ideal model is to try to build one killer feature. Like that's how we started Ninja Alerts. It's like one feature, get a push notification when somebody mints or buys or sells something. If you can start with that killer feature use case that has recurring use, and then you can fundraise, then you're off to the races.
And you've taken a very unique path. I don't know if I've had anyone on almost 300 episodes of the show that was a founder and then became a VC and then decided to get back in the ring of founding, right? But you have basically the whole toolkit though, as you stepped into this, right? The initial feature of letting people know when people are buying or selling, or whale calls. Just tell us the like brief overview of what Ninja Alerts are, but then more just curiosity, or just sparking my curiosity of like, why get back into the ring of being a founder when traditionally most founders just become a VC and then that's kind of like the end of it.
Yeah, I always like to say like the great founders stay founders, the good founders become VCs. I consider myself a journeyman personally. Like haven't had that big success, as a founder. Like I've been moderately successful. I've done more well on my investments than I have done as a founder personally. And I think part of it was that I was already doing this before I started the fund. And I made a commitment to do that. And that initially the reason for doing the fund was because we were building this educational software. So it was like a kind of eat our own dog food kind of thing. And then we decided to pivot into the Web3 space, and we found initial product market fit with what we're doing. And so if I could wave a magic wand, I would just be doing like only one thing. But I've kind of found myself in a position where I guess it's like very exciting, and there's a lot of overlap between what I do. My primary job as a CEO is marketing and fundraising, and my primary job as a VC is marketing and fundraising. So for me, like the inception of Ninja Alerts was started as like a solving my own pain point of, I got into NFT trading on Ethereum and I actually bought my first Ethereum, like sold some Bitcoin for my first Ethereum in 2021, because I was like, what is this NFT thing? I need to spend money to be willing to lose money to learn, right? And that was the same thing that got me into Bitcoin in 2013, was I was like, I need to just invest so that I can learn. And in 2021, I turned like 4 ETH into like almost 100 ETH, just like trading, minting, etc., and doing it part-time. It's just like anybody could win in that time, right? Like there was like a chart of that someone shared where it was like percentage of mints that were profitable from like April to like November, and it was like 70%, and then it just goes down to like 30%. And so it was a hot market to be in, and but it was like also very draining. Like there's like so much things happening all the time. I had like a big Samsung G9 monitor with like 8 windows open at any time, with like Chrome extension refreshing all the pages every 10 seconds. And I was like a bit addicted, and I was like losing balance in my life. And I was like, if I could just get a push notification when the smart traders I know are minting things or buying things, or set up a push notification for when something changes in a specific contract, that would cut out like 80% of the time for me. And so that was the initial idea. I followed the lean method with it. I interviewed a bunch of traders in a community called Metaverse HQ, adjusted the idea a bit, like honed the idea, launched a landing page and launched a Discord. And like within 1 month, we got like 60,000 people in our Discord from zero. And we minted a lifetime license for those early NFT users. That was quite successful. And we hit product market fit pretty quickly. And so I would say, like working with the different investors over my career, the best investors well, an investor has three jobs. Like investors, one job is to raise money from LPs for their fund. The other job is to help companies. And the third job is to get into the best deals. And so when I think of the most valuable VCs for me, it was like the people who are best at the second job, like actually helping the companies. And those VCs were always the people who had spent, like, were earlier in their career as a VC, like coming from a founder, that they spent more time as less time as a VC. So it's like if they were previously a founder for a decade and they were 5 years into being a VC, then they're like 2/3 an entrepreneur, and that would also get reflected in the deal making as well. I think that maybe being a founder doesn't help for a VC as much when it comes to like raising money from LPs, but like for actually helping companies and for deal making with founders, like the best VCs to work with were always founders. And in this space, I think I benefited tremendously from building on Ethereum in terms of my understanding of the technology, which really helps me to stay on the leading edge of what's going on. So like if we weren't building, a blockchain analytics tool on Ethereum, I would have not nearly the amount of understanding of what's going on in Ordinals as I do. And so it kind of like sharpens my sword, sharpens my axe for being a VC in many ways. And it also makes, I think the overlap is very powerful because, we end up working or partnering with when I want to find a partner for what I'm doing with Ninja Alerts, I always think hey, should we invest in this company? There's a lot of overlap between the two that strengthens it. But I think probably in the long run, I want to focus on one thing, just for the sake of my own health and balance in my life.
Right. Make sure you're not aging exponentially, as this space tends to do with people. Being an entrepreneur is we're generally people who have a pretty easy time identifying problems and then coming up with solutions. And then I think the tough part with being an entrepreneur is choosing which solution is the right path towards success. But also I guess an important skill of an entrepreneur is knowing if you choose a path and it's the wrong one, just taking responsibility and saying, hey, I need to go right back down this path and start a new one. And I know I've seen Ninja Alert go through, I think, 3 different versions so far. I think you just launched V3, so congrats to that, and have had a lot of success. But also knowing if you're a VC in Bitcoin, to see a new wave come in, like Ordinals, to say, hey, maybe this is something we need to focus on, and then we could come back to Stacks or all these other ecosystems. When Ordinals came back in, and this is probably the conversation everyone's now waiting for, like, finally, Ordinals. What was your first thoughts about it? Were you aware that Casey had been building, this SAT tracking system? Because when Leo, Adam, and I had talked with him the summer before, he never brought up the inscription part. He only talked about the SAT tracking. And if I was aware of the inscriptions, I'd probably be in a much different position than I am today. But, luckily it's still here and still having a lot of fun. But initially, did you really understand what was going on?
I didn't. And the first thing I noticed about it was just like who was engaging with it, right? So I've been following Udi for a long time because I saw him as like a source of like positive change in Bitcoin, in terms of like when I got involved in Stacks, the beginning, like I used to, like, the first step I did on Twitter was like subscribe to the Ethereum hashtag and the Bitcoin hashtag. And on Ethereum, the left side of the curve was easier to find right away. Like I would see people like pumping shit coins and being like one ETH equals 1 BTC, like let's fucking go, pump it. And I'm like, what the hell? Like, this is ridiculous. And so I unsubscribed to that. And then it wasn't until like maybe 6 months or 9 months into being with Stacks that I found the left curve of Bitcoin, which is the laser eyes, and this was as soon as Manib and Adam Back got into some type of Twitter argument, which, by the way, that argument actually like got Stacks up from like $1 to like 1.8 or something like that. Then my timeline was full of like replies from people calling me a scammer, harassing me, telling me to go fuck myself. And I was like, oh shit, okay. Like, this is where the left curve of Bitcoin is. And it just seemed like a very hostile place for developers. And it became very apparent that there was a cultural problem and a cognitive bias problem, because actually most of my work advising founders is coaching them through cognitive biases. Like that's what lean startup is all about, is actually about taking an idea and putting a more of a scientific framework around how to test it in the market. And the things that get in the way of with founders is, of course, like ego, attachment, falling in love with your idea, confirmation bias, like listening to what you want to hear, not looking at the data objectively. And so, I have like a sixth sense for this kind of stuff. And like, I could very easily tell like the laser eyes, like there was something intellectually confused, and it seemed like it was clear to me that would not last and that there would be a breaking point. And for me, when Taproot Wizards inscribed the 4 MB block, that was like the breaking point for me. That was like, I was like, all right, this is something this is like going to have a huge impact on Bitcoin as a culture and as an entire ecosystem. And as I looked more into it, it was just like very obviously useful. It's like digital artifacts fully inscribed on Bitcoin. Okay, how much does it cost? Oh, it's not that expensive. Oh, you can, you can inscribe it in like up to 4 MB. And here's the reason why no one's done this before. It just seemed like so obvious. And every single week or every single month, the traction exceeded my expectations. Like we were saying, hey, we're going to get to 1 million, by the end of the year, and then we hit 1 million in April, 2 months later. We're like, oh, we'll get to 10 million maybe 2 years from now. It's like we hit 10 million, a few months later. And people started building more things than just ordinals and inscriptions. They built BRC20s, right? We're doing recursion now, right? We're doing so many more things that this is a game with a very high skill cap. Like this is not like Flappy Bird where you play it a few times and you just get bored of it because it's the same thing over and over again. This is like, a multiplayer first person shooter with like unlimited levels where you can play this and never run out of new things to run into. And so that's how I thought about it.
Yeah, now looking at it 6 months later, it feels like the Ordinal ecosystem's really speedrun every narrative from the 2017 ICO bubble, where we're just replacing white papers with Git books, to DeFi summer 2020, we're just using BRC20s and trying to do it on chain, to the NFT run of sub 10K inscriptions, to rare sats, to generative art. There's all kinds of different things that are happening. But it leads to this question. I don't know if I've ever heard anyone propose this to you. It's like, do you think any of this is quote unquote a scam? Can there be scams on Bitcoin? Is there any type of fraudulent infrastructure that can be spun up as something like that could be considered wasteful, like meme coins or money drainers or anything that exists on Ethereum?
Yeah, I think we've seen, well, the money drainers are different, but you have the same phishing attacks, that you have on Ethereum. I believe that the money drainers, you have to actually confirm the transaction, and like maybe you can't read it as well. But I think that at least on Bitcoin, the transactions are deterministic in the sense that on Ethereum, without using a app like, let's say, Pocket Universe, where it actually runs a live fork of Ethereum and simulates your transaction by sending that transaction on a different network to see exactly what it does. On Bitcoin, like it's so limited that you can't have any type of looping or Turing completeness. And so I do think that the risk is lower, but social engineering will always be an attack vector. You'll always have like rug pulls where people say, send me Bitcoin, I'll send you this ordinal, or they try to mint out an ordinal project and just, rug the Discord, rug the Twitter, disappear. You can't like protect people who don't take the effort to protect themselves. And you also can't stop bad actors from coming into any place that they want to go. And so I think that like the laser eyes have always butchered the word scam. Like they literally call everything a scam. Ethereum is a scam. NFTs are a scam, et cetera, et cetera. I think coming from Silicon Valley, you just have a realistic expectation that 95% of things are going to fail. And then you look at the Web3 space, you're saying the risk is elevated here, so even more things are going to fail. But you also have the perspective of like that failure is good, that you need large volume of failure for breakthrough discoveries to happen. Like Thomas Edison said, he tried 9,999 versions of the light bulb until he found the one that worked. And so we know in Silicon Valley that if you have 100 startups and 99 of them fail, one of them actually pays for all the improvements in quality of life, in productivity, in growth and job creation, that in excess, like 10 or 100 times more than the losses that you incurred from those other 99. And for the entrepreneurs who fail, yes, it sucks to financially fail, but also they gain a benefit from it. They gain renewed. It's like putting yourself to the hardest challenge possible. You know what I'm saying? And then you grow as an individual, even though you may have nothing financially to show. Your brain has operated in a way where it has taken complete initiative and been responsible and been in the locus of control for multiple years, which leads to, like more new neurons being created in your brain and new abilities and personal growth in so many ways that, like, net everybody wins in this type of situation, right? And so the challenge with Bitcoin comes that the value proposition of Bitcoin is not to change. Like, the main value proposition of Bitcoin is that we are not going to change this, and you can depend on what it's going to be like. Now with Ordinals, what we did is we created separate node software so that we didn't need to change Bitcoin. We came with clever solutions that we can add a different layer on top of, and then we can prove the demand in the market without risking the core of Bitcoin. And so I think that is the perfect symbiotic relationship between the developer and innovation ecosystem and Bitcoin. And like when it comes to the laser eyes, I think they come from a more general business perspective. Like, and I spent a long time working with corporate business people, and they have no clue about startups. They have no clue about you have to fail to be successful. It's a whole different mindset and way of working in a startup than in a big company. A startup is not a small version of a big company. A startup is fundamentally an exercise in navigating uncertainty, whereas in a mature business, you're in an environment of a long track record of historical data, and you're just trying to exploit or execute as efficiently as possible on a known plan and direction. And so I think that there needs to be more conversations and discussion about that in the Bitcoin space, because that will lead us to more unison on how we grow Bitcoin as a platform, not only to disrupt the legacy financial system, but also to become a replacement for the fiat system.
Yeah. And if Bitcoin does want to be that replacement, there is a bit of this chicken or the egg issue that exists right now within the culture. There are cultural wars, whereas we saw Vitalik come out in support of Ordinals. We've seen Michael Saylor, right? We've seen this change, right? We saw Dan Held and Peter McCormack come out in support of Ordinals, and never thought I would have seen that happen. But the issue of the chicken or the egg is that the most of the liquidity is still trapped, right, within the laser eyes wallets. Essentially, they're holding, a large supply of it, and it becomes.
I would disagree with that. I would say that there's, like, it's not just laser eyes versus Ordinals maxis. There's also a third group of people. And actually, if you look at the most wealthiest, other than Saylor, like, there's a few billionaires out there. There's probably, like,
you have like the Winklevoss twins. You have Saylor.
I mean, the biggest Bitcoiners are multi-coiners, like CZ, Winklevoss twins, Arthur Hayes, Brian Armstrong, like the OG Bitcoiners. The laser eyes is a cult that was created in in the time period after the block size wars, leading into and gaining steam in the 2021 phase. The majority of the laser eyes don't actually hold a lot of Bitcoin, right? And they're new recruits who've been told stories from war about how bad this group of people are, and had this game of telephone where it's like the story changes, one step along the way. And it's more like, a scenario that we see maybe like in, I don't know, a region of the world where you have like two societies that have grown up in parallel and had prior conflicts that, led them to having this antagonistic relationship. And so that's like the story with the laser eyes. But I think in terms of like liquidity.
Yeah, so here, let me rephrase this a little bit. So for those that are generally large holders of Bitcoin, they generally have this high degree of self-sovereignty. They have a preference for decentralization. They don't want any intermediaries. And right now, a large majority of the ordinal infrastructure does have to have this third-party intermediary, whether they're using or centralization, whether they're using PSBTs, or they actually have to have a third-party signer or indexers. How do we onboard that type of liquidity into ordinals when it may never meet their expectations or their kind of values and principles?
Yeah, I don't know that the barrier is the decentralization aspect of it. I tend to think that just like the market for digital art is somewhat independent of the blockchain. I think that there's definitely a Bitcoin aspect to it where there's a lot of people who would increase their investment in digital art and digital collectibles for it being on Bitcoin. But I think that the Ethereum and Bitcoin's NFT space is very codependent. Like, I think even in the time we're in right now, like, I think with all the shenanigans that Blur is doing, I think that's having a negative effect on the whole space. I don't think that solely affects Ethereum NFTs only. So, will we see like I think that we'll have a gradual rise of like, people as it gets closer to them, as it stays alive longer, people like Sailor will start to get into it and others will get into it, but they're not going to be maybe into it in a meaningful way as much as like they might just not meet the demographic of like a digital collector, right? Like the idea would be, I think, to grow the space is that we would have to look at like what the archetype is now of these collectors and try to find more of those people maybe outside of the space and get them over the barrier of joining the space, or to make these digital collectibles more valuable, right? So growth is always about removing friction and increasing grease, like increasing the UX, making it easier to do. But I think it'll be hard to make the UX so seamless in this space. It's like going from not having an internet to having an internet, like in the AOL days of like the 90s, right? Or the late 90s, where it's like America Online, it's like we're putting in a modem, and then you're like on AOL, it's like you've got mail, like like it's a whole different ball game. And so I don't know that we're going to web 2.0, web 3 in a very fast way. It also takes like going from product market fit to like a mass market user experience takes a lot of resources. People think of it like, oh, you just have a good UX, but actually what happens is like once companies have product market fit, they raise like a Series A. Majority of the resources going forward are made by like small experiments, improving the user experience and increasing the numbers of conversion by like 1% a month, or 5% a month. To increase your conversion at 5% a month, if you could do that every single month, like you will be like, the compounding result of that is like exponential growth. And so once you become more mature, like if you're like an OpenSea level company, yeah, you're going to release new features that make it more valuable, but there's also teams dedicated to improving the UX, where it's like it's going to be very, very slowly and a lot of resources. So like getting that, like the space to add more, to reduce friction, I think there will be limitations too, but like adding new use cases to add grease to make it more valuable, I think is probably a lower hanging fruit for where we are. So like I think that, like, are we going to be able to awaken that capital in Bitcoin? I also tend to think that actually NFTs are a little bit like, if you think of like the hypothesis that like Bitcoin is actually not let's say it's not digital gold, it's just like a high risk tech stock. Like that's kind of how it's performed. Like NFTs are even a higher risk than like Bitcoin,
Or like a beta.
yeah, they're like, it's like levering up the risk even higher. So, we may not see that adoption really take off until, like we just saw today, CPI is down from like what it was like 9% previously, now 3%, like 2% is in range. As soon as we start getting inflation under control and like the government goes back into, stimulating the economy, I think that's what's like going to have the biggest impact on this asset class, in addition to like new use cases.
Yeah, I've been in the space since 2016. There's always been that motto that Bitcoin will be that uncorrelated asset. Unfortunately, it has not become that. Maybe it can in the future. But it's interesting then, as we kind of wait or wonder if this, capital will ever be freed up from Bitcoiners to actually be spent. Ethereans actually have no issue, at least from what we've seen, about, trading their capital and trying to make more or losing it. It is interesting when you kind of look at the differences between the two ecosystems. Ethereum, from a technical level, obviously much more superior. How protocols are rolled out, generally the contract is rolled out and then the social consensus forms after it. Whereas on Bitcoin, it's generally social consensus and then technical formation afterwards. This is right. Ordinals were built off of theory. Then we see bitmap theory, and then we see a plethora of different types of standards. As somebody who in this case will put your VC hat on, how do you evaluate social consensus in terms of forming capital to back something?
Yeah, I tend not to rely on social consensus. You know what I mean? Like I try to look at things beneath the social consensus. So like when I look at ordinals, I like to call it like a capital network effect. Like I say, like there's people who've invested so much money and resources into this, and they have so much to lose from it if it doesn't succeed, that they have a direct like for something to come along and compete with that, like to recreate that social network and give people, like, to create a new community where most of the early adopters have already come to ordinals, and people are you're going to give them some like even more of a financial incentive with more to lose. Like that would be like really, really difficult. Right. So I think that, and for like BRC20, right, like one of the issues with Ordinals is not necessarily that there's like these centralization aspects. Maybe that like directly puts a cap on the potential. Like for example, the cumbersomeness of BRC20s and maybe the potential brittleness of it will probably limit like the ultimate market cap. Like I think that like wisdom of the crowds, efficient markets will say, hey, even look at the space now. It's like the most decentralized asset is the most valuable, right? Like, and I think that BRC20 may run into similar issues, but I think even more difficult right now is coordination, is social coordination. And so you look at like how it works with Ethereum. It's like you put out a smart contract and then just it's like very clear, like people can plug into it, interact with it however they want, build on top of it, etc. With indexers and with these kind of like git book first approach, it requires a lot of more social coordination. And so I less look at it as like social consensus and more look at it as social coordination and also like how invested people are in something. And I think that like if I like let's say I'm investing in like a BRC20 marketplace, right? Like it's less an investment on saying BRC20 is a thing, but more of an investment on saying it could be the thing, but this team will also figure out whatever is going to come next. And they've proven that they can execute quickly.
Yeah, I think with BRC20s particularly, it's what the ecosystem is waiting on, whatever that next upgrade is, which I've heard there might be some, or wherever the actual utility is. Right now, it is really moving just kind of how Bitcoin did initially, where Ordi is really just the dominant one and everything kind of moves in unison with it. It is quite interesting. But as you kind of wrap up all your skills into one, it seems like you've really kind of became a dominant player in terms of like the spaces and educational component, as well as you are investing your dollars. Maybe spaces is kind of where the deal flow comes in, and then tweets are where like the social signaling comes into play. Just as like looking at it from your perspective, how do you view spaces and how it impacts, I guess, all of your business endeavors?
Yeah, I think Twitter is where all of crypto is. I think Twitter is where it's the highest ROI activity for the space, because also there's restrictions around marketing in the crypto space. Like a lot of like Google, Facebook, et cetera, will not approve ads for crypto companies. And so Twitter has kind of ended up being like the main go-to as a social network because things can go viral really quickly. And I think for Twitter Spaces, it is like the most powerful way to build like a relationship with a large group of people, right? And when you're on Twitter Spaces, you're also talking to like the most important people, like the most influential people who are most clued in, who are most intellectually interested. There's, it's more powerful than it's different than a long form podcast. Like what we're doing here is like, we're going much deeper into a topic. But I think with Twitter Spaces, you have this serendipity element where anybody can pop in. You can hear from multiple perspectives. People can kind of have like a brainstorm session and it can spark a lot of creative ideas, right? And that's a really unique thing. I think it's an incredible medium. And personally, I think that it's going to, I think it's like where YouTube was in like 2016 or 2015 when it was like, oh, PewDiePie made $7 million. Like, this is crazy. Like he's just a YouTuber. And when people found out like, hey, like I think it was like there's some survey where like young kids, like the job they want most to do was like become a YouTuber or something like this. And it's like it went from becoming like a laughing stock to like becoming, an incredibly serious platform where we see Joe Rogan interviewing presidential candidates and things like this. And I think that Twitter Spaces will grow in that direction, or, something, maybe it'll be the threads version of Twitter Spaces, but it's very clear it's an incredible medium. And from what I've seen of like, CPMs and like metrics wise, like it has an incredibly high and powerful impact on building a personal brand, on promoting a product in an authentic way, and just on getting the word out to the most connected people in the crypto space.
Yeah, it's really it's really, really huge engagement hack. But man, I don't know how you and Leo do it with the 6-7 hour spaces. And it tires me the fuck out. So really, really props to you. But you do get to interact with brilliant minds, creative minds, and also get to, educate. But, as we, come to an end for this show and kind of speculate where we go next, what are like, we'll say the main 3 weak points of Ordinals that you are watching for that you'd like to see improve so that maybe the whole ecosystem can kind of hit that next wave up? Because it feels like it's been in this like larger correction over the last month or two. Maybe you have a few things popping up, but overall seems like sentiments It's still strong, but the capital's kind of drifted away a little bit.
Yeah, I think honestly, I think that Blur is keeping a lot of people on the sidelines right now in terms of like if the ETH NFT floors are going down and the volume is going down, people are going to be less likely to participate in Bitcoin as well, right? If our friends over on Ethereum are watching their, their generational wealth wither away, they're going to be less likely to, take a few extra bucks and go over and try Bitcoin ordinals. And so I think that the space right now is at a very interesting inflection point. I hope that some of the changes Blur makes fixes things, or I hope it implodes as soon as possible, because I think that immediately we'll see a rebound of demand. And I think that it'll wake a lot of people up to what's been happening in the past 2 months, mainly. So I think that's the short term. I think the long term will be, again, the macro environment. So what happens with we saw with the SEC today, that was great news, like that it's going to push the SEC back quite a bit in their attack on the larger space. I think if we see administration change in the White House, that another administration will most likely be much more favorable towards crypto and could write off a lot of the losses of the previous administration. And, whereas like the attempt to hinder the growth of the crypto space for the current administration is really to prop up the economy. It's like to put in more capital controls, to restrict the movement of money outside of the US. And then I think it's just about, like building, and I think and attracting more builders. Like the lifeblood of any blockchain is directly correlated to the number of developers and the number of good developers. So the more good people that we can attract, the better. The way that we do that is by focusing on staying intellectually curious. Like the reason that Ordinals is even here and that we've had like such great opportunities like Ordi or OXBT or OMB, BTCD Gods, OCM, like these successful projects and liquidity coming into it, is because we weren't just trying to pump our bags. I mean, like smart people who have money can tell right away if you're trying to pump your bag. You know what I mean? And when you focus the content around and you focus the discussion and the values around pursuing your intellectual interests, that's going to attract the smart people who have liquidity to bring and want to participate. And so we need to remember how we got here and not lose sight of that and keep doing what's worked in the past without kind of the sense of entitlement of like, oh, I just missed OXBT, so I have to pump the next thing and make sure that like my bags grow because I missed this and I deserve this. This should pump because I say so. And there's that kind of like that entitlement that you see when the market's a little bit too frothy, like to kind of like fight that and to also call it out and to attract developers by keeping things interesting and also helping elevate good projects. I think there's a lot of kind of community management that takes us from like here to there from values. And I think that we've been really lucky with the early community and ecosystem that is formed around Ordinals. It's always a delicate thing to grow a community, and it always, changes over time. I mean, Ethereum 2021 was all, rainbows and butterflies. And now it's like, we saw like two like grifters, like meme coin, like shitcoin guys, like the Ben, ETH, and Polly, like they're going to do a boxing match. Like this is how bad things have gotten on Ethereum. Some of that will be out of our control, but to the extent that we can keep our head on our shoulders, the liquidity will come. I think that this movement is inevitable, and there can be mistakes made along the way. You can have actors like Blur who like can really like stunt the growth of an ecosystem, but we're trending in a really good direction where we are now.
Yeah, you, Leo, Udi, Billy, and a handful of them. Danny, you guys have all done a good job at, being the leaders and being very welcoming, especially to the multi-chainers and not just saying Bitcoin only. As Bitcoin becomes the ordinal ecosystem, it's very immature, and letting others explore, using Bitcoin and ETH or Bitcoin and Solana, or letting the Bitcoin SV guys come in and capture it, right? Though this was largely a year ago, that would not be okay for anybody. And it still does feel like there is some hesitation of those who are in Bitcoin of if you go dabble on Ethereum or go dabble on Solana, there's almost this hence moment of like, is that okay? But I think you guys have done a good job at really facilitating, that Bitcoin can also be an experimentation playground for users, and that it's highly encouraged. So appreciate you for doing that and for coming on the show, man. I'm glad that we finally got to talk one-on-one, and I look forward to doing this next time in the future.
Awesome, Jake. Thanks so much for having me.
Thank you guys for listening and watching. We'll catch you next time.